Whether you're a new investor or have been following the stock market for decades, it can seem overwhelming. But what if I told you that there are alternatives to stocks and bonds, with just as much opportunity and with a lot less risk? I'll dive into those on today's Money Minutes. Hi, I'm Mike McMeans, president of Silverlink Financial. Welcome again to Money Minutes. Investing is complicated. It's why there are those of us who have dedicated our lives to helping people navigate it. We help people invest regularly, stay invested and pivot during tough times, and find unique opportunities not found by those who choose to do it themselves. And lately there's been a lot of talk about alternatives. They are made to sound very interesting, but what are they? Simply put, they are investments that are alternatives to stocks and bonds. They generally fall into one of four categories: private equity, alternative credit, real estate, and hedged strategies. I am not going to go into each one of those holdings more specifically here because it would take hours and each one has its uniquenesses. But their main function is to accomplish great returns with significantly less risk than the stock market. In fact, many of the largest retirement plans and endowments in the country have up to 50% of their money in these strategies. It has allowed organizations like the Harvard Endowment, the Bill and Melinda Gates Foundation, Ohio Public Employees Retirement System, California Public Employees Retirement System, and many others to generate great returns at a much lower level of risk. Now you may ask why most average investors don't invest in these same items. It's because they are limited in their liquidity. Private equity, for example, is quite complex. Holds your money for 7 to 10 years and then gives it back. And for most of these investments, the net worth requirement is at least $1 million and sometimes as high as $5 million. When I first found this out, it didn't seem fair to me. Like only the wealthy have the opportunity to access this special thing or something. But the fact is that the average investor isn't worth that much, nor can he or she weather the storm and wait for it to pay off. Someone with several $1 million could, but that's simply not most people. So in an effort to protect consumers, the bar to entry is high. The best way for someone of more modest means to gain access to these strategies is through funds that specialize in bringing this kind of strategy to the market. It won't provide all the upside potential that direct investment will, but reduction in risk for the same return is still very valuable. In particular, private credit, private real estate, and some hedge strategies are highly accessible. If you'd like more information on making use of such strategies, please let us know. Feel free to leave your comments below, and feel free to follow us on social media or connect with us on our website. I'm Mike McMeans, president of Silverlink Financial, and thank you for watching. I heard a good joke about investments recently. What's the biggest difference between men and investment bonds? Bonds mature. We'll see you next time.